Dear students, very good evening and thank you for joining us today for this insightful webinar organized by Student Skills Enrichment Board. And we are delighted to address all the bright and aspiring chartered accountant students who have gathered here today to explore the fascinating world of financial modeling and the indispensable role which Excel as a tool plays in this domain. Before we dive into the topic, I would like to extend my gratitude to the ICI leadership for their efforts and vision in organizing these kind of skill development webinars and providing a platform for knowledge sharing. Today, we are fortunate to have with us the chairman of the Student Skills Enrichment Board, CA Mangesh Pinare, sir. Sir, thank you for joining us. May I now request you to kindly address our students?
Yes, thank you, Alok. In fact, it's my duty, in fact, to be there in these programs of entire Student Skill Enrichment Board. I'm very pleased to be here in this program. Dear students, as you all aware, Student Skill Enrichment Board, or as it called as Board of Studies Operations also, has been organizing this practical training module. And this is in fact the fifth one, and earlier four one on, I mean, on each topic or each aspect we are doing two sessions, and so in that sense it is a third topic. And as I have been saying, in fact, I have visited so many students conferences, I have been talking to the students, and as I have been saying that we are not here to teach you the nitty-gritties, but how the practical aspects, how these aspects are practically important to us, and how practically we will be using different aspects of our academics or of our studies or of our, even this IT and orientation programs. So these skill sets we want to develop. So today we are going to have one such program on Excel, or one can say that how to use practically the Excel, MS Excel in our financial field or financial area, where we are more concerned about. General Excel tricks we know, but how to apply it practically in our financial model or financial field, that today we are going to discuss. And we have with us CA Sharan Kumar from Hyderabad. I think he's a managing committee member, but more than that, he has an experience in Microsoft and and has been taking this technology sessions on YouTube, which has been very successful. Thank you, Sharanji, for being here with us in our this session. So students, I'm just appealing to you. I'm very happy also to note today that immediately I've seen the number of students logged in. I think we have crossed 7,000, and that's a great achievement. But I would like to go further. In fact, in almost all the students' conferences, I've been appealing to you that as many students as they can attend, we can have more programs on such practical aspects. And please send your suggestions also in this regard, what kind of a programs we can do it. If you have heard any speaker somewhere, you can refer that also. It is your board and your institute. So collectively, whatever for development of the entire student fraternity, skill set development, we can do that. So today, let's hear from Sharan Kumar, what about the different aspects of Excel and how we can use it practically in our financial field. Over to you, Alok. Thank you, all the students, and thank you, Sharan ji, for being here. Alok ji, you
My
can
pleasure,
proceed
sir.
with the
Thank you so
session.
much.
Yeah.
Thank you. Thank you so much, sir. And it is your guidance, your perseverance that we are keep on coming out with the new formats of PTM this year. Fast reading skills has been conceptualized by you, and we are also coming out with the NTH for this particular kind of a skill set. Thank you so much, sir, for giving us such innovative ideas and for implementing skill sets in our PT. Now,
Alok
I
ji,
would
just a
like
minute.
to welcome our
Alok
faculty,
ji,
the Excel expert. Yeah, please.
Alok, I'll just disturb you. I'm just interrupt you because I'll not lose this opportunity seeing 7,000 students here. Dear students, I mean, there'll be a question in the mind that we are learning Excel, we are learning technology, but at times students don't have the IT infrastructure at their home or office and not able to use it. So we are coming out with the guidelines also in this regard that the IT centers throughout the branches we can utilize, and we are going to give a dedicated time. We'll come up with that decision. This just I wanted to inform. Thank you. Sorry, Alok, you can just proceed.
Thank you. Thank you so much, sir. Thank you for this such an excellent idea again. I would like to introduce our expert for the day, C. Saran Kumar, CU Saran. So, Mr. U. Saran is a qualified chartered accountant. He qualified in the year 2010. He has also completed diploma in information system audit from ICI. He is also a certificate holder in forensic accounting and fraud detection course on concurrent audit from ICI. He has worked with top corporates, including Microsoft and Credit Suisse Bank, for more than 3 years. Presently, he's also rendering his management consultancy services in the field of automation, data analytics, dashboards, process audit, process documentation, etc., for many listed as well as unlisted companies. Thank you so much, sir, for giving us time and for joining us today. Now I would like to give the proceedings to you and to just make us aware as to what all is there as far as the Excel formulas is concerned in modeling, in coming out with the financial models. Thank you so much. Over to you, sir.
Thank you so much, Alok, for quick and nice introduction. And thank you so much, Mangesh. Whether you remember me, I met you a couple of times last year at Hyderabad, and very dynamic chairman. I heard a lot about you. And in fact, today, though virtually he is not present, I spent a lot of time today with SSCB co-chairman also, Mupala Sridhar sir at COA Hyderabad. Um, in fact, thank you so much, Alok sir, for this opportunity, because when it comes to the Excel is something which I passionate about. Many people ask me, Sharan, how you know this entire Excel, or maybe whatever the Excel I know? Many questions I get. They ask me to refer a nice book. They ask me to tell about a course which they can join, and within 5 days they can complete and they can become a master. I always tell, if you want to become the master for application, you have to apply it, as simple as it. So considering this, why I'm telling this before taking up the session is, you may next 1.5 hour I'm going to talk a lot of functions which may be helpful in the financial modeling in our day-to-day. But if you just listen and go away without any practice after a couple of years, in next couple of years, I doubt whether you can remember all these. So especially when it comes to the technology, it's not about how much you are learning, but how much you are practicing. Practice always makes especially technology perfect in our day-to-day work, because when you start practicing, you will get many questions. When you will get many questions, you will start solving towards the answers. When you start solving the answers, you will get the confidence. Once you get the confidence, your body will get that maturity. Once your body will get maturity, your mind will automatically set towards that. Tomorrow, any problem comes, I'm sure I can resolve. With this little introduction towards my topic, let me share my screen. I hope my screen is visible. Generally, my sessions will not have great PowerPoint presentations. I'll directly jump into the Excel. However, just let me tell you, today the core focus of the session is how to use the financial functions. Where we'll be using the financial functions in our day-to-day work in the financial modeling. You leave about even financial modeling. If you want to file income tax return, on the last minute, you found a client where he is telling us that, Sharan, I'm having a housing loan. I'm having the housing loan. Then immediately we ask for, give me the housing loan certificate last year. How much was the interest? How much was the principal? Then he say, Sharan, I don't have any housing loan certificate. It is after 6 p.m. Even bank is not available. Let's say he's not even having the credentials of net banking. Then will you leave the directions as it is? No. We have to do some work around. In those cases, how you can calculate what is the principal portion which is eligible to claim under Section 80C? What is the interest portion under Section 824? We calculate it. But how you can calculate, that is one case study. The other case study, you are preparing the projections for next 5 years. And for the company, you are having debt. There is a debt balance as on today. When you project towards the next 5 years, when it comes to the sales, on what assumption, on what basis you will record the growth, how you can assume for the next 5 years, for which there are many methods. I'm not going much deeper towards the theoretical part of what are the assumptions in the financial modeling and so on, but I'm just trying to tell you using tools like Microsoft Excel, how easily you can do. In those cases, I should calculate what is the average growth, or let's say as a fixed growth, I can say that I can assume that for next 5 years, my company will constantly grow 30% every year. Is it true? Then immediately we go and look into the last 1 year. How was the growth? It was just 8%. Then if it was just 8%, can I consider 8% and do my projections for next 5 years? No, I have to even see last 2 years. Last 2 years, it was 10% and 8%. When considering the average 9%, can I do my projection? No, I need to see at least last 5 years. Can I go directly last 5 years and take the average and apply for next couple of years? There are many methods involved. In those cases, we apply a compounded annual growth rate, CAGR. How we can calculate CAGR? Are we going to calculate manually? Or is there any way the Microsoft Excel functions support us calculating CAGR? Let's say you are doing some consulting work for a company where the company is trying to tell you, Mr. Saran, this is what project I want to go into, but could you please do some work and tell me whether this is viable or not. One measurement whether a company, whether an investment is viable or not, based on the cash flows. Let's say he has provided you what are the cash outflows and what are the cash inflows for next 10 years for that particular project. Then immediately what we do, we calculate the net present value. I'm sure if you are a student, either in the CA Inter or at the CA Final, you may hear about all these words. When it comes to the net present value, how we calculate? I may need to do manually, like each year, how to calculate the discounting factor, then multiplying the discounting factor with the cash inflow or outflow, then totaling all the values? No. In Microsoft Excel, there are a bunch of functions which support all these activities. Without going much into the other topic, let me just quickly tell you. Let's first understand what is a financial modeling, what is Microsoft Excel, financial functions in Excel. Though there are n number of functions in Microsoft Excel, but we use generally, if you use 100 functions, which are very popular, you can consider yourself as a master before you join into any company after your qualification. Because there are trigonometry functions, which may not be required for me because I'm a chartered accountant. There are functions which supports the cube functions, may not be required for me. There are functions even in the financial category. I don't use it day in and day out. There are functions which are engineering category. I don't use it day in and day out. If you can mix all the functions together, if you see what are the relevance of the function in our day-to-day work, I can say maximum 100 functions which you can learn and you can become the master in your day-to-day work. Financial functions is the topic for today. So I'll try to cover 10 to 15 financial functions, which we can use day in and day out in our day-to-day regular work, be it financial modeling, or income tax return, or for even debt calculation and so on. Once you know the financial function, how you can build the amortization table. The meaning of amortization table, let's say if you step into a bank, if you say that I want to take a loan of 20 lakh rupees for next 10 years at the rate of 1%, then bank immediately will tell you by just keeping into their own calculators, Saran, first year, this is what the principal you are going to pay, this is what the interest, second year, this is what the interest, this is the principal, and so on. As you all know, when we calculated the equated installment, initial days, the interest rate is more. Once you go towards the maturity period, the interest rate will go down. When it comes to the principal, in the initial periods, the principal amount is very limited, and over the period towards the maturity, the principal amount is more. If I want to know for next financial year, how much interest I'm going to pay and how much principal I'm going to pay, so that I can properly do accounting. I can properly project my financials. In those cases, I feel the amortization table is something which is very helpful. As I mentioned, generally I don't depend in my sessions using Microsoft Excel. Let me, is my full screen visible for everyone? I think I'm in full screen. Yeah, okay. So let me go into the Excel. Let's start looking. I'm sure I did not explain what is Excel and so on, because as a CA student, I'm 100% sure if you are doing either article or maybe if you are doing any consulting before your CA interqualification, Excel is one application day in and day out we use. It is a spreadsheet application in which you can do a lot of work. I can classify the entire work into 3 parts. You can enter the values, you can write the formulas, and you can apply the formatting. On top of all these 3, you can do the analysis. That is what the Microsoft Excel. Now, let us start looking into, in Microsoft Excel, what are the different types of functions we have. Before me talking about the function, I'm sure you all may be having a question. Sharon, could you please tell me the difference between formula and the function? Can I ask? I think I'm not getting the interaction. That's fine. So if I ask you the question, what is the difference between the formula and the function? What is your answer? Don't worry, I'll tell you. Anything if I start with an equal sign, 10 plus 10, this is a formula because I started with an equal sign. When you start with an equal sign in Microsoft Excel cell, it automatically understands that you are writing the formula, right? What is the function? For example, if I take 10, 20, 30, if I ask you to sum all these 3, I'm sure this is one way you can do. But there is one more way you can do. Equal to sum this colon this. This is a formula. This is a formula. Both are formulas. Let me use a function called formula text so that you can see the formula, what you have written in the previous cell or whatever the cell, right? The difference between this and this is, in fact, both called as the formulas. This is the formula because I started with an equal sign, which evaluated and given called 60. This is also the formula. But if I have 50 items, I cannot keep in my formula each and every item plus symbol. That's the reason what Microsoft did. Microsoft understood that this may be a problem every person who is using Microsoft Excel may find. So that's the reason they introduced, they made a small code. Now, if they started creating small program at the back end, so many lines of the code. This code, what it does, it's a small program. What it does, this code total the values of range, right? Like that, they started writing the codes. They started writing the program. Let's say this code total the values based on the range, based on the criteria. There is one more program they have written. Let's say there is one more program they have written like this. And let's say this code, this program calculates net present value. Like that, they understood what people may have find the problem tomorrow. They started writing the program. That means if you can execute this program, it can total the values of the range. But if you want to execute this program, how you need to call this program? That's the reason they started giving the name for each and every program. For this program, they have given the name as a sum. This is the program which total the values based on the criteria. They have given the name called sum if. This is the program which calculates the net present value. They have given the name for this program as NPV. So The function is nothing but a program at the backend. Functions are defined by whom? Microsoft Excel. While giving Microsoft Excel an application to us, it created many programs at the backend. For each and every program, it has given a name, and that name I should call. In this case, I am trying to call a program called sum function. But if you want to call this program, there are parameters which are required to you. Those parameters are nothing but the arguments, are nothing but the inputs I have to provide. Otherwise, when you don't provide the inputs which are required to execute a particular program, I'll get an error. As simple as it. So, functions only work in formulas. Functions make your work simple. I hope everyone are clear when it comes to the formula and function, the clear difference. I know what is the question you may be asking. Sharon, how many functions are there in Microsoft Excel and where I can see? Very simple. Go to the formulas tab. You can go here. These all are the financial functions. Though 40 plus functions are there, I may be just covering 10, 15 functions in today's session because my session is not only just financial functions, but which are useful in financial modeling, right? These all are the financial functions where Microsoft presumed that there will be a problem where people find it to calculate the present value. So they have written a program and they kept as a function called PV. But if you want to execute the PV, you have to give all these parameters. These parameters, we call it as an inputs. Inputs are nothing but the arguments which are required to calculate a particular function. I hope I'm clear, right? Now, these are all the logical functions. They did not give all the functions into one bucket because they made it into different categories. Category is based on the nature of the work, what the function does. These all functions does towards the financial. So I'm sure these functions are very much helpful to you. Whenever you have a time, start looking into these functions. Logical functions, where you have a question to answer. Let's say sales is greater than 5 lakh, then you should give a discount. If the sales value is less than 5 lakh, you should not give a discount. That means there is a logical thinking. If it is a logical thinking, I may use one or other function which suits my criteria by looking into the logical functions. Text functions, whenever you want to manipulate the text, I want to convert everything into uppercase, or I want to convert everything into lowercase, or I want to extract the last 5 characters, or I want to extract the first 5 characters, or I want to extract something from the middle, or I want to convert into a specific format. I want to substitute, replace. This all with respect to the text. I want to know whether all the PAN numbers which I'm having 10 digits or not. I can use a function called len and so on. However, in Microsoft Excel, when you deal with the data, one column, I'm sure you 100% find it in your data, is the date column. When you have the date column, I need to do my analysis towards the dates. When it is a date, you can do a lot of work around the date. You can extract the year, you can extract the month, you can extract the day, you can extract the weekday, working day. You can find how many working days are there between 2 dates. You can even find which weekday it is, whether it is Saturday, Sunday, Monday. Let's say you are doing an audit and you found 1,000 invoices which raised by the company in the last 1 year. If you want to do the proper audit, first what I do, I take the invoice date number, invoice date. I'll then extract which weekday on which the invoice raised. I'll take all the invoices raised on Saturday or Sunday. Let's say Sunday is the holiday. I'll extract all those invoices. Then I'll take on which they accessed the system while raising this invoice. Then I'll take the time post office hours. Then is it not a small investigation which I am doing with a small column called a date, with a small column called a time? Yes. But only the thing is we need to have a proper visualization. What work I can do from this data, right? So these all are the date and time functions. These all are the lookup and reference functions. The very important function like VLOOKUP, XLOOKUP, then HLOOKUP, index, match, offset. These are all functions, Look up in the sense it looks into your table, a range. It can get the relevant value for you and so on. These are all the functions where you talk about the maths and trigonometry. We don't use the trigonometry functions in our day-to-day work. However, there are many math functions which may be helpful, like sum if function, count if, average if, round function, and so on. There are a bunch of statistical functions which we may be using. We use the count, count A, count blank, count if, then statistical functions like average and so on. We don't use engineering functions day in and day out, cube functions, information functions when it comes to the questioning. Just to know, I want to know whether a particular cell is having a blank or not. There is a function called is blank, is error, is error, and so on. I'm just trying to give you a quick introduction. What are the functions? Today, I may be covering 10, 15 financial functions and leave. Every week, they cannot have a session. SSCB cannot conduct a session on one set of functions. I'm just giving you how to open the doors towards the functions. Then you yourself can go and start learning the functions on your own. But you just need to have a basic understanding what functions are helpful for what and so on. This is just a small intro. Let me go ahead. Let's start about financial functions. In today's session, I'm going to talk about financial functions, the following financial functions. You know what? We'll start with NPV. Then we'll go with XNPV, IRR, XIRR, then RRI. Do anyone know what is RRI? There is a function called RRI. Don't worry, I'll talk about it. There is a function called PV. There is a function called future value. PV means present value. We talk about NPER, in how many periods I can pay. We can talk about what the rate of interest. There is a function called rate. Now I want to calculate EMI or any equated installment that can be quarterly or monthly or yearly. PMT is the function. I want to only extract the interest portion from the equated installment. IPMT, I want to extract only the principal portion from the EMI. PPMT, right? I want to know from a specific period to a specific period, what is the cumulative interest? CUM-IPMT, I want to know from a specific period to a specific period, what is the principal portion? That is what? CUM-PRINC. I feel these are the functions which are very much helpful to you when you work with the financial modeling. Leave about financial modeling. In your day-to-day work also, wherever you deal with the financials, right? What NPV function does? It calculates net present value. What XNPV function does? What is the difference between NPV and XNPV? This works in case of consistent periods, but this works in case of inconsistent periods. I'll talk about it, don't worry. This function calculates the internal rate of return. Same like in case of consistent periods. In case of consistent periods, I'm going very slow so that you can understand the language what we are using. Okay. Right? This is in case of inconsistent periods. RRI calculates CAGR, compound annual growth rate. I'll tell you what is the meaning of. This is very important. PV function calculates present value. I don't know how many of you know that these many functions are available. Right? FE means calculates future value. NPR calculates the number of periods. Always observe the wordings what they have used. NPR. N is number, PR means periods. So it calculates the number of periods. I'll tell you in what situation this function helps you. This calculates, self-explanatory, this calculates the rate of interest. This calculates the equated installment. Equated installment. This calculates the interest portion from a specific installment. From a specific installment. When I can have a function which can calculate the interest portion, there must be a function which must need to calculate the principal portion, right? This calculates cumulative interest from X period to the Y period. From X period to Y period. Yes, this does the same work, but it calculates per the principal portion. I hope I'm clear explaining you what this function does. See, I don't want to explain. I don't want to explain each and every function. I want you must need to know. Because if you want to learn about a specific function, I can give VLOOKUP, I can give XLOOKUP. You will learn only those two functions. And wherever those two functions comes exactly in a way, what I explained, you can solve. If new problem comes tomorrow, you cannot solve. That's the reason, thanks to the ICI, they are coming with the new syllabus. The new syllabus is more of conceptual based. The new syllabus is more of conceptual based, meaning whoever having good conceptual knowledge, they can solve the problem. Whoever having just the bookish knowledge, they may not solve the problem, because they must, if anyone want to solve the problem, they must have a strong knowledge towards the basics. In fact, I'm going to cover the same. I'm trying to give you the same. Without me trying to explain what is a function, I have covered, I think in the introduction, inputs are very important. Inputs are the same thing can be called as an arguments, or the same thing can be called as the parameters to write any formula, right? If, for example, just as an example, if I ask you a question, what is the meaning of error in Microsoft Excel? Is error an answer? Is error can be an answer? I have one question. What is the meaning of error? Is error can be the answer? Can be an answer for any formula? Yeah, for any formula? Yes, I have two questions. Error means we all know it, like value error, name error, num error, divided by 0 error, and so on. Is error can be the answer for any question? Of course. Error is also an answer. Error is also an answer. But it may be a wrong answer. But it's so. I hope I am clear. Try to understand the logic from my question. There are a bunch of errors. There is an error called value error. There is an error called name error. There is an error called divided by 0 error. There is an error called any error. There is an error called any error. There is an error called null error. There is an error called num error, and so on. There is even one more error called ref error. In the latest version, there are a bunch of errors. If you observe carefully, this is the only error ends with question mark. This is the only error ends with nothing. Remaining all errors ends with an exclamation mark. That means when you write a formula, if something goes wrong in the formula, value error will come. Divided by 0 error will come. Null error will come. Num error will come. Ref error will come. Name error comes in a situation when you give a wrong name. For example, my friend Alok. If I enter, what is the answer? It's going to give me name. It is shouting me, questioning me. That's the reason there is a question mark. Mr. Saran, I could not identify a name called Alok in the entire Excel. Is it a cell name? No. Is it a range name? No. Is it a defined name? No. Then what it is? That's what it is asking me back. Mr. Saran, you have written a formula. In the formula, you entered a text, but that name I cannot in a position to understand. For example, now this is the 60. I will just go to the name box. I will give a defined name for this as an Alok. Then automatically this got changed to Alok 60 because now Alok is having a meaning, right? So that's the reason it's not a error. It is just a questioning the user. That's the reason it is ended with a question mark. Name error equal to VLOOKUP. I want to look for 40 in this table. If it is available, give me the same column as an answer. I want to look for an exact match, close bracket. Now, if what should come? For example, if I put 20, that 20 should come as an answer because this 20 is available in this table. The same result I want to get as an answer, enter. For example, if I am looking for 40, I get an error. Do you know the reason why? Because the value what you are looking for is not in this table. Is it my problem? No. Without the mistake from my end, just because the value what I am looking for is not available here, I've got an error. An error comes in a situation where without even a mistake from the user. Very important error in the Microsoft Excel. But why error is also one of the answers. That's what I told you. That is very important statement. Then, for example, there is a function called rand between. What is the meaning of it? There are two values you can enter, start value and end value. You can get some random value. When you keep on refreshing, you will get some keep on random value. Wonderful. If I can put the same thing, rand between is a program I'm planning to use here. I just kept n and enter. Can I do enter? Can I do enter? If I can. But if I enter, what will get? What I'm going to get? I may be getting error. Is it? No. You will be getting a pop-up message. What it is saying, Mr. Saran, I expected 2 arguments here, but unfortunately, you are given only 1 argument. How I can execute this program? So, pop-up message is not an error. Whenever you are writing a formula, if you got the pop-up message, the meaning is you are somewhere went wrong, blunder. You did not understand the syntax. You did not know how many arguments to be entered. For example, 10 is there, 100 is there, 1000 is there. Can I enter so that I get my answer? Now also you will get the pop-up. Earlier it has given me a message, you have entered too few arguments. Now it has given me a message, you entered too many arguments. Meaning, Mr. Saran, first understand what is the program which is required to get the random value, for which you identified random between is a function, very good. But if you want to apply the random between, Mr. Saran, there are 2 arguments which are required, but unfortunately you entered 3 arguments. I cannot execute this because my program at the back end has defined only with 2 arguments, but you entered 3, I'll not allow. Very good. Enter. You'll get the answer. For example, this is A. Now, will there a chance I'll get a pop-up message? 100% no. No. Why? Because random between is a valid function. Yes. There are 2 arguments which are required. Yes. Start and end, bottom, up. Till there, I'm clear. So it is going to execute this program. But after execution, it might be giving you an error. This may be wrong answer. But program execution happened. Okay. Why wrong answer came? It is expecting a value type your number, but you entered a text. So if you want to become the master of any of these functions, don't by heart, understand. If you want to calculate properly what is NPV, first you need to understand what is NPV theoretically. How you need to calculate that manually. On the paper, you must need to be clear. Otherwise, you cannot understand Microsoft Excel functions. Microsoft is a tool which can help you to make your manual work simple, which can automate your work. But if you don't know the basic concept of NPV, obviously Microsoft Excel also you cannot know, right? So what I'll be doing, let me open a Microsoft Excel file, which is already here called working file. I'll explain you two concepts. Then we will go and start writing the program. I think mistakenly I have used my Power Automate. Let me close it. Let's try to understand what is NPV. NPV stands for net present value. It is one of the very important financial metric used to assess the profitability, the value of an investment or project. NPV takes into the account the time value of money by discounting the future cash flows to their present value and comparing them to the initial investment. It is very simple to measure whether it's a positive or negative. If the NPV is positive, it indicates that the investment or the project is expected to generate more value than an initial investment. A positive NPV suggests that the investment is potentially profitable. Otherwise, on the other hand, the negative NPV suggests that the investment may not generate sufficient returns to cover the initial investment and the desired rate of return. Meaning, what is the meaning of time value of money? Time value of money means today I'm having 100 rupees. Definitely, if I go back 1 year, this may not 100, this may be having little lesser. If I go future, 100 will become more. For example, let me just explain you. This is 2023. If I can put this 100 in the bank, in the safest investment to the government, let's say I'll get 5%, just as a fixed deposit, right? By 2024, even if I do nothing, this 100 will be added to this particular percentage. 105 it will become. Next year, it automatically become 105 will become 110.25 and so on. This is the time value of money I'm talking about. This is the time value of money. If this is the case, let's come back and try to understand what is NPV. Today I'm investing some amount as an initial investment. I will calculate my discounted cash flows. If I can compare my initial investment with the discounted cash flows, if my discounted cash inflows are more than what is investment, that means this is a good investment. If it is less, instead I can safely put into the bank. The NPV formula is cash flows at the 0 year, cash flows divided by 1 plus a rate of interest whole to the power of 1 plus for the second year discounting factor and so on. Don't worry, I'll not go theoretical. I'll go into the practical. Let's go to this. Let's take in the market, I can earn 8% on a specific investment. Let's say year, I can put 1, 2, 3, 4, 5, right? I have an initial investment. I can put it here, maybe 20,000. From this investment, I can get cash flows every year. First year, I can get 5,000. Second year, I can get 5,000. Third year, I can get 5,000. Fourth year, I can get 5,000. The last year, I can get 8,000. I invested today 20,000. Every year, I'll get 5,000. Last year, I'll get 8,000. Now, can I simply say that, is it a good investment? No. What I need to do? Concentrate, I'm going to even put combining this and this together, right? Now let's say I have at present a value called 1 rupee. 1 rupee is with me. After 1 year, with 8%, 1 rupee will become how much? How much? Let's calculate. Let's calculate. Now I want to calculate the present value for 1 rupee. How I can calculate? Can anyone tell? It is very simple. Today, after 1 year, 1 rupee will become 1 plus 8%, right? After next year, let me put F4, right? This is nothing but, let's say, I'm just trying to take 1 rupee. This one I want to refer here, and I'll just put here to 1. Now let me drag this down. Okay, I'm sorry. This should be again F4. Okay. 1 second, 1 second. I'll just take a proper reference. Let's say this is 1 rupee. Now what I'll be doing, I'll just take this as a reference. Now enter, copy, and paste. If I'm not wrong, this is the way it go. Yes, right? Today, 1 rupee, after 1 year, it will become 1.08. After 1 year, 2 years, it will become 1.16 and so on. Right? What I'll be doing now, I'll calculate the same using a Microsoft Excel function called PV, present value. What is the rate of interest? 8%, comma. How many number of periods you want to take? 1. In this case, 1. Let me freeze this rate. I know F4 is a freeze to convert into relative reference to absolute and so on. Number of periods, I'll take 1 for present because I want to calculate to the next year, next year, next year, and so on. Comma. Is there any month equated installment you'll be paying? No. Right? I want to calculate the future value. I'm sorry. In this case, the future value, because after 1 year, what is the value? What is the present value now? 1. I hope I'm clear. I want to calculate the future value considering the rate of interest 8% for 1 year, 1 rupee if I have today in my hand. Obviously, it is 1.08 because I made this as a cash flow which is positive. Automatically, after 1 year, it is a negative. Just to avoid the confusion, let me put minus. Now, if I drag this down, after 2 years, this is the one. After 3 years, this is the one. And so on. And so on. This is my manual calculation, and this is my formula by using the future value. I hope everyone are clear what I'm talking. Okay. Now, I'm just trying to take you to the very basics. Once you understand, remaining thing is very simple. Now, the same question I'll ask you. After 1 year, it is 1.08. I want to know at the 0th year, right? The same 1 rupee at the 0th year, what is this value? After 1 year, I know it is 1.08. Today, what is the value of it? It is 1. After 2 years, 1.16. Today, it is 1. After 3 years, 1.25971. Today, it is 1. Let us see whether it is correct or wrong. I'll take it present value. There is one more function called present value. What is the rate of interest? This, F4, comma. Number of periods, I want to calculate for 1 year, comma. Is there any equated installment? No, comma. Future value, this. I'll be having 1.08 after 1 year with the 8% interest. Could you please tell me what is the value of 1.08? To avoid the confusion, let me put minus because I taken here a positive figure, so it is a minus. No problem. If I drag it, can anyone tell me what is the answer? Still 1. All are 1. See, this is the future value and this is the present value. So this is the way we calculate the future value and the present value. Very simple way. Don't worry. I'll take it a little further. If that is the case, this can I call as a discounting factor, meaning after 1 year, 1 rupee is equal to how much today? Try to understand. After 1 year, 1 rupee is equal to how much today? In this case, I've taken this, right? In this case, I've taken 1.08. But instead of 1.08, I'll just simply take 1. What I'll do it, I'll take the same calculation, Control C. I'll do Control V. I'll just put 1. The meaning, Mr. Saran, after 1 year, your 1 rupee is equal to today 0.93, meaning 93 paise. Copy paste. Wow. Wow. Very good. After 2 years, 1 rupee, today it is equal to 85.73 paise. After 3 years, 1 rupee, today it is equal to 7938. After 4 years, 1 rupee, it is equal to 73 paise 50. After 5 years, 1 rupee, today it is equal to 68. Okay. Now, this can be even calculated manually with the function, with the formula what they have given. What is the formula they have given normally? Equal to 1 divided by 1 plus the rate of interest whole to the power of 1. This is the mathematical formula what they have given it to us. This whole to the power of 1 should go here, enter. Just copy and paste it. So that you'll get the future value. Okay, so when this is nothing but 1 rupee future how much? If I put instead of multiplication, divided by, this is after 1 year, 1 rupee, today it is equal to how much? Try to understand. A very basic functions how I am trying to play. Okay, that's the reason when people asked me what should be the title, we can keep it for this session. I did not directly given financial functions using Microsoft Excel. Let's play with financial functions in the Microsoft Excel ground. The intention is this. Okay, so Microsoft in the Excel code, we are trying to understand in 360-degree angle our manual concept, functions concept, manual concept using Excel, all has to match. That means our concept should be clear. Okay. Now, 1 rupee, this is a discounting factor. Discounting factor in the sense, after 1 rupee today, it is equal to 0.92. After 2 years, 1 rupee today, it is equal to 85 and so on. Now, what I need to do, cash flows multiplication discounting factor. This is the cash flow. Let's multiply with the discounting factor, copy and paste. That means future cash flows, I discounted with the today value, I got the sum of 22,000 rupees. Can I call this as an NPV? No. This minus initial investment is your NPV. But this I calculated manually. 2,005 rupees is the NPV. Right? Now what I'll be doing? Instead of me doing this entire thing, I'll just put it using the formula. What I can do, I'll just go here, take the formula, put here, but in not this NPV function. This what? The financial function. What is the rate of interest? The rate of interest is 8%, F4, comma. What is the values? These are all the values of my future cash flows. Close bracket, enter. Wow, it has exactly taken the same. Minus initial investment is this, absolutely same. What manual work calculated, the same, even using the NPV function I calculated. Without even anything of this, by just writing the formula called NPV, I could get the same result. Now I'll just go here. I can just put it maybe 10%, right? I can put it 11%. I can put it 12%. I can put it 11.5%. See, when I start changing this, the NPV at some point will become 0. The rate at which your NPV becomes 0 is nothing but the IRR we call. The internal rate of return is a rate at which your NPV is 0. That means if I calculate the IRR, I'll just go to the bank. If my bank is giving less payment, less rate than the IRR, I'll go to the investment. If my bank is giving more than that or any other investment, then I can opt out and I can go into the bank. Simple, right? So manually, it's very difficult. 4, 9. It's very difficult for me. See, it is almost near. But if I can put a formula like IRR, these are all values, close bracket, okay, including this, I should take it. Now it is a num error because all are positive. There is no negative figure. Okay, so what I'll be doing, so just to avoid that confusion, okay, in the case of IRR, I will take 1 second. It will, because all are positive, it will not become value at all. So what I'll be doing, I want to take even 20,000. So 1 second, just give me 1 minute. Now in this case, what I'll be doing, I'll just take it. I'll just take this. Unfortunately, it takes all from this is 0th year. Now let me put minus 20,000 because this is the way it understands the IRR. If you want to use manually the IRR, this is the way you need to write the formula. Now I am going to put IRR. Now let me take this, close bracket. It's going to give you some formula. It's going to give you some formula, right? Now you can just put this here. Exactly. I hope I am clear. Okay. So we understood what is the IRR function. This is the IRR function, right? So equal to formula. Next, this is IRR. We understood what is NPV function. We understood what is present value function. Now, I always have an habit of writing formula text so that I can see what formula I have written. We also understood what is the future value function. Let's see what is this function is. Wonderful. Okay. So I request all of you, because don't worry, after the session, I'll be sharing this template to the SSEB. They may be sharing with you all. Let me save this file as a working file. Don't worry about time. Saran, you said 1.5 hours, 1 hour, most of the thing you have taken introduction. I know that. Working file of session. But we built very strong with respect to the basics. Now in next 30 minutes, you can play around financial functions. Now this is the NPV. And we are. Now my work is very simple. Now in this case, if you observe, NPV means after exactly 1 year, 5,000. After exactly 2 years, 5,000. After exactly 3 years, I'll be getting 5,000. After exactly 4 years, I'll be getting 5,000 and so on. There may be a situation tomorrow. There may be a situation. Let me just copy and paste this. Let me just add before this X, before this X. Let me remove everything I don't want. Right? Now let me put this as a 8%. Try to understand. Let me take this as here instead of keeping here. Let me take it here. Let's put it as a 0. Instead of me keeping 0, let me put the today's date. Exactly not 1 year. Let's say after 200 days only, I'll get 5,000. After 200 days, 5,000. After 70 days, I'll get another 5,000. This one after 700 days. This one after 800 days. If this is the case, how you calculate the NPV? Earlier, it used to be very difficult. Thanks to updation of Microsoft Excel. First, initially they introduced NPV function. Later, they have given XNPV. Now I'm going to use XNPV function. Rates is this. Earlier, just it has asked me to take the values because by default, it can understand first year is the first year, second year, third year, and so on. Now, along with the values, it is asking me to take the dates so that for each respective date, it can calculate the proportionate discounting factor. Enter. Oops, how come? Okay, I'm sorry. This is the negative. Wonderful. 3000 is the NPV in this case by using a function called XNPV. This is the NPV. Okay. For example, if I make it 4,000, if I make it further 4,000, if I make it further 4,000, I'm sorry, right? 499. But if I ask a question, at what rate this NPV will become 0? X IRR is the function equal to X IRR. These are all the values for these are all the rates. At the rate of 9.1, I'm sorry, 9.109%, your NPV is becoming 0. Wow, excellent. Okay, so I hope you all understood the difference between consistent periods and inconsistent periods. Again, consistent, inconsistent. So let me highlight all the functions which we have covered. It looks like I have covered basics, but without knowing, we have almost covered these functions. Let me cover this function, which takes little time, but more important. Please concentrate. CAGR, which you can calculate using the RRI function. Let's try to understand the theoretical concept of what is CAGR. Then we can understand what is this. Just give me 1 minute. 1 minute, yes. Yeah, no problem. Let's try to understand what is CAGR. CAGR stands for compounded annual growth rate. It is a measure used to calculate the average annual growth rate of an investment or business over a specific period of time, assuming that the growth remains constant over that period. CAGR is particularly useful for comparing the growth rates of different investments or businesses. This is what the compounded annual growth rate. What is the formula? CAGR is equal to ending value divided by starting value whole to the power of 1 divided by number of years minus 1. If you don't put minus 1, you will get the total values, compounded annual growth, you will get it. But if you want to have a specific rate, minus 1 so that a rate will come. If CAGR is 9.51%, what is the meaning of it? This means that the investment grow with an annual average rate of approximately 9.51% over the 5-year period. That's the meaning of it. Maybe 1 year it may be 12%, 1 year it may be 7%, 1 year it may be 13%, the other year it may be just 6%. But when you look into the last 5 years, annual compounded annual growth rate is 9.51%. CAGR is a useful tool for evaluating investment performance or comparing the growth rates of different investments or businesses, especially when the growth rates are not consistent year on year. Obviously, when you're trying to work with a real client, the growth rate will never be same. Don't worry, we calculate here the RRI. What's the meaning of it? Let's say I got the sales of a particular company. Let's say 2018, 2019. Let's take this. Right? This is what the past and this is what the future. I'll be trying to calculate for the next, I'm sorry, same color I have given. This is for the next 5 years I want to presume. So let me take next 2 years. Wonderful. Let's take the sales, some random figures I'm trying to take, very random, 250, and this is 300, this is 290, and this is 345, and this is 350, and this is 385, right? Now, how you can get sales for the next 5 years? This is the question. I hope, let's say these all are in crores. These all are in crores. In crores. 250 crore, 300 crore. Generally, what we do, we will see the growth of last year. This minus this divided by this. There was a growth of how much? 10%. So considering absolutely 10%, is it? Let's make it 89, something like this. Okay. Then considering this as a growth, I will simply take this F4. Then I'll just simply copy and I'll paste. Okay. I'm sorry. Then this into, okay, this 1 plus this. Okay. I'll just take in, copy and paste. Absolutely. But is this correct? Maybe this particular year it is less, but previous year it may be more. Before that, it may be further more. So what I wanted to do in this case, I want to take it, this is a average of last year. I want to take as, I want to calculate here CAGR of 5 years, considering this as a base year. This is a base year, and this is year 1, and so on till 5 years I have. Right? Try to understand. What is the formula? First, I need to get. I want to calculate the CAGR equal to, let's look into this formula. Ending value divided by starting value. What is ending value? This. What is starting value? Base value is this. Close brackets. Then whole to the power of. Let's put the whole to the power of. 1 divided by number of years. 1 divided by, I'm calculating for 5 years growth. Right? Enter. This is nothing but your annual growth factor. I want the rate. So I'll just simply put -1. So the CAGR of last 5 years is this. But this is a manual method I'm calculating. If I want to calculate using the formula, what I'll be doing, I'll put a function called RRI. How many number of periods? 5, comma. What is the present value? This is the base value, comma. What is the future value? After 5 years, this is the 1. If I enter, it is exactly the same. Right? You can calculate either manually or even you can calculate this is the 1, this is the 1. This is using this. I can calculate this, right? Multiplication with 1 plus 9.25%, right? This must be 4. Enter, copy, paste. Wonderful. This is the way we can calculate the CAGR, which help us project the future cash flows considering the last couple of years. That's the reason if you go to any financial statement or any of the analysis, they calculate CAGR for 3 years, 5 years, 10 years, and so on. I hope I am clear explaining a function called RRI, which calculate CAGR, right? You can calculate CAGR even for the stock rates also, even for the stock rates, no problem. Let's go here. I am also done with this. I'm done with this, right? Now let us look into, don't worry, this all looking like so many, but you got the stuff which is required to understand the concept. Now we can cover much easily. Now I can consider this as a equated installment case study. Now, I went to bank and I applied for a loan of, let's say loan amount is 25 lakh. Then bank said the rate of interest 8.25%. Then NP, then number of periods banks asked me to pay in 25 years. I want to calculate EMI. This is the question. In this case, I'm sure you can use a function which helps you to calculate the equated installment is PMT. PMT. What is the rate of interest? This. What is the number of periods? Is this. What is the future value? Is nothing. Sorry. PMT, number of periods. What is the present value? This. Close bracket. But friends, this may be wrong. You see, obviously negative because at present, which is coming into your pocket because you will be taking the loan, every month it will go out of your pocket. But this is not monthly, this is annual. How do you know? Because I have taken rate per annum, total number of periods, years. So let me put divided by 12. Let me put into 12. So monthly, I need to pay the EMI of 19,711. Is there any effort which I capture by just a small function? Very simple. Very, very simple. Very simple. Just a function called PMT. Let me explain you why I've taken divided by 12 because I'm calculating interest per month. Why I kept into 12 because I'll be paying 25 years. Each year, 12 months, 25 into 12 are the number of periods, right? Wonderful. This is what the PMT function, which help us to calculate. Now, what I wanted to do here itself. I want to know what is the total repayment. I'm just doing some work around here. What is the total repayment? Simple, this into 12. Wow. I want to know what is the principal portion. I want to know what is the interest portion. Simple. This minus principal is my interest. Is there any other way which I can calculate the same thing? Of course, you can calculate the same thing even in other way. If I can calculate the cumulative interest from starting period till the end period, I should get the same answer. If I can calculate the cumulative principal from the starting period till the end period, I should get the same answer. Now, what I'll be doing, I will use a function called CUMPRINC, cumulative principal payment, right? So, what is the rate? This divided by 12 because I'm calculating per month. Number of periods into 12. I'm sorry. Into 12 because I'll be paying monthly. PV, present value, is this. Let me put minus just for the safe side because the present value I'm taking positive, so your answer will be negative. Comma. What is the starting period? I want to calculate from the first period. What is the end period? 25 into 12 because I want to accumulate my interest principal payment from the first period till the last period. Last argument is whether interest is accrued at the end of the period or starting of the period. End of the period. This is what my rate of interest, how many number of periods I'll be repaying, what is the present value, from which period to which period. Tell me whether the interest is accrued at the end or beginning. Wow. This is correct. This is I've taken using manual. This is I've taken using function. When I know a function which can calculate cumulative interest payment, cumulative principal payment, I can copy paste the same. I know there is a function called CUMIPMT which calculate cumulative interest payment. Exactly the same. See, we understood what is PMT function. We understood what is cumulative principal, what is cumulative interest payment. Here we can do little Jugalbandi. Let's play around this particular one. Okay. What I'll be doing now, I'll just copy this. I'll just copy this. I'll just go here. I'll just go here. I'll paste special values. Okay. Just copy this, paste special format, then copy this, paste special format. Format here. Okay. Now, guys, let's say the loan is not available, but I know how much. Let's say I want to pay the EMI of 17,000 per month. I know I want to pay in 20 years. I know my interest rate is 8% only. Could you please tell me how much loan I'll be getting? This is other way around question. Instead of me going and ask what is the loan and rate, NPR, asking the bank what is the EMI, I decided in my mind I am only I can afford of 17,000 per month. I can pay in 10 years. The rate of interest bank confirmed 8%. Then how much loan I'll be getting? Then the banker will say, don't worry, Sharon, I'll tell you. The present value, rate of interest, this divided by 12 comma, number of periods, this into 12 comma. What is a PMT? Every month you'll be paying 17,000. Enter. Mr. Sharon, 14 lakh 01,165. Let me put it minus because my EMI is a positive. Now, for example, if I take this value and pay special value here, can anyone tell what will happen? The loan will become 20 lakh, 25 lakh. As of now, 16 because I made it 10. Let me put 25. I made it 8%. Let me make it 8.25. Absolutely. This is nothing but the PV function. For example, I want to calculate for the same year. Let's put here 25 lakh. Right? Copy, paste special value. Now, I'm not having the rate. Now I want to calculate the rate. Is it possible having remaining three parameters? Of course, it is possible. Equal to rate, number of periods this, into 12, PMT is this, comma, present value is this, close bracket. Oh, this is 4 into 12. Can anyone tell me why num error appeared? Sharon, how is it possible? You are taking a loan which is positive. You are paying every month, which is also a positive. No. Either this should be negative or this should be negative. For the time being, let me put my PMT as a negative. This is monthly. I want to calculate yearly. So it is 8.25. For example, this is the rate. I want to calculate number of periods. Then what I'm going to do, I'll just take the same parameters. Let's say now 25 is missing. Is there any way I can calculate this? Of course, there is a function called NPR. Just learning one function is sufficient. Remaining all are bonus to you. This is the PMT and this is my present value. You will get again error because something one should be negative. Let me put this as a negative. I want to put divided by 12 so that it will give me the year wise. Of course, if you want to know EMI, we already know how to handle it. It's very simple. There is a function called PMT, simple, right? Let's go here. Let's start writing the formula equal to PMT. Rate is this divided by 12. This into 12. This is the present value. Wonderful. If loan is not there, use the PV function. Rate is not there, remaining three are available, use the rate function. Number of periods are not there, use NPR function. EMI is not there, use the EMI function. Right? So this is the way we could calculate the we could calculate the EMI along with cumulative principal and cumulative interest. I think we have covered this, and these two. Don't worry, for a specific portion is exactly the simple what we have done just now. For example, I'll put a drop down here. Let's say I have a period. Let's say how many periods I can have? I can have 25 years, right? Let me use a function called sequence 25 into 12. 300 periods I'll be paying. What I'm going to do here now, I'll put a drop down list. This is the list I want to take, so that in the drop down, any period will come. Let me cut and paste here. Let me put it as a period. Now this is the drop down. Now this is the period drop down. This is the period drop down I have. I'm just trying to build something. Don't worry. You can understand, right? I want to know what is the interest portion for this drop down. What is the principal portion for this drop down? This is the interest portion. This is the principal portion. If I take 1 for the first EMI, what is the interest and principal? If I take 2 and so on, how I can do that? Don't worry. IPMT is a function. Rate divided by 12. PR. For which period? This is the period, comma. NPER, number of periods. This into 12, comma. Present value is this. Let me start with minus because my present value is a positive, so that I'll get the positive figure. See, in the second month, this is whatever interest payment, and this is whatever principal payment, PPMT. This together, don't worry, it will always become EMI. It will always be equal to EMI. Let me have a quick check. This minus sum of these two must be always 0. Don't worry at all. Those all checks are automatically done. Now, if I want for first period, second period, third period, fourth period, and so on, so that if I go towards the end, for the last period, I know most of the amount is a principal, but very little minute interest is there. The check is always 0, don't worry, right? This is a function called IPMT. This function called PPMT. With this, all the functions which I thought I could cover by using financial functions using Microsoft Excel I have covered. As promised in the flyer, I thought of covering the amortization table. Amortization table is, but don't worry. You may be thinking it very big. Let's say I got some 10 crore loan. Let me make it simple, 20 lakh. And the rate of interest is 8.5%. And 8.5%. Let's say number of years are, let's say 10 years. No problem. Okay. Then if I want to know what is a period, I can simply use a function, as I mentioned, the sequence function. The number of rows are nothing but this into 12. That means I'll be paying in 120 periods. For if I want to calculate EMI, EMI should be same amount. PMT, then this is what the rate divided by 12, and this is what the number of periods into 12, and this is what the present value, which is 20 lakh. F4, because this value should not move. This is F4. I'm sorry. This is F4. Again, this value should not move. This is F4. Now let me put the minus symbol, enter. EMI, don't ask me the question that's why the amount is same, because it's an EMI. Now, if I want to calculate the interest portion from here, I can use a function called IPMT. Let me start with minus so that we can avoid the minus in the result. Rate is exactly the same. See, same formula, Control C, Control V, but just put I. But along with that, one more argument before NPER for which period you are calculating. Enter, copy, and paste. So for each period, what is the interest? For each period, what is the principal? How to calculate the principal? It's simple. Control C, Control V. I can just put PPMT. You can just, if you want, you can have a check. Now, if I can have the period, let's say the starting period, cut, let's say cut and paste here, start date. I can have what? I can have maybe first equal to EO month. EO month is a function. Let's take today's date, comma 1. right? So it's going to take 31st August, right? Now, what I'll be doing, I want to take a period exactly which it belongs to. After 1 year, I'm going to pay the EMI, right? So I'll be using the same function EVO month, right? This is what my start date is. This is what my start date is. F4, comma, this is the 1 month. Exactly after 30 days. It will be 30th September. I'll be going to the end of the month. Now you can simply copy and paste. Wow. For which period it has given me. Now what I can simply do, can anyone tell? Select this. Go to the insert. Click pivot. And I want to have my pivot table in the same existing worksheet. Maybe here. Wonderful. Now I can just make it smaller. Now I can simply make the pivot table, presuming that you all know the pivot table. Otherwise, I'll request SSCB to conduct one more session on the pivot table. So let's take the period, rows, by default it group. Let me do Control Z because I'll be grouping later. This is the interest, this is the principal. What I'll be doing, I'll group now. First, before grouping anything, let me select this and this, give comma format with 0 decimal so that looks nice. Right click. I want to group. I want to give year-wise, quarter-wise, month-wise, but I want to give years in the columns. Otherwise, yeah, just put years and quarters. That's all. I don't want months. If at all you want months, keep it. Otherwise, can remove. Wonderful. Right now, I want to keep it into the report layout, tabular form, so that if anyone understands every year or every quarter for next 10 years, how I'll be paid, they can do like this. If at all anyone want even to know based on their financial year, you may have one more function here called financial year. Using the if function, you can put it and you can take that into the pivot table. That is done. I think I am covered. I covered the session. Maybe any questions we can take up. Yeah. Alok sir, over to you.
Thank you so much, Saran sir, for such a wonderful session. And I think so we have to slate another session because there are so much more to learn. And the way you explain all the formulas in such a lucid manner and that way, also covering the fundamentals behind these formulas so that student can understand the basics first and then they can apply the ready-made solutions offered by Excel to us. And this is a very informative session, in fact, indeed, because whenever we approach the bank, we always, wonders as to how they are calculating all this because doing it manually will certainly going to be a very tedious task. Moreover, what I was earlier thought of, Saran sir, they might be having some sort of an application which they would have generated for their sole purpose. But after learning it from Excel, this all these tools come so handy. I think so. Even any common man, any common student can calculate all
Yeah,
these
before we ourselves going into the bank,
important.
we can do the homework and go.
Yes, we can do ourselves, and this will also brings much more transparency and confidence in making our decision. Thank you so much for this session, and definitely we're going to have more sessions covering more vital aspects, and definitely there is we can have the session on pivot table as well because that is again a very important utility. So one thing, students, which I just want to request to you is just try to understand the basic concepts. The concepts can be covered through Excel. It can be covered through any other tool also. So we are having the more analytical tool to be covered in our new syllabus, which is 9. Then there will also be Power BI. Then you might also wonder as what these data analysts might be doing. They are just pitching up some programming language, it is Python or R. See, what you need to understand is we have to learn this approach as to how we have to approach the data. We have to learn the nuances of the data. And if we are clear, believe me, these are only tools, and whatever tool you are comfortable with, depending upon, because every tool has its limitation, we have to understand those limitations. Depending on that, you can do whatever you are doing on Excel on each and every of these platforms, which are getting, so much highlighted nowadays. So, thank you, Saran sir. Now, I would like to request my colleague Kapilji to kindly give vote of thanks to our esteemed faculty for that. Over to you, Kapil.
Thank you, sir. Good evening, everyone, to the one and all present here. Honorable SSB Chairman, CA
Sir, I
Mangesh
hope we
Kinde,
did
sir.
not miss any questions.
Respected.
Any questions were there? I'm sorry for interrupting.
Sir, you covered all the questions in your presentation itself, sir. Thank you.
Wonderful. Thank you.
Uh,
Go ahead.
uh, Honorable SSB Chairman, CA Mangesh Kinde, sir. Respected Vice Chairman, CA Sridhar Mupala, sir. CA Saran Kumar, you, sir. Learned Speaker of the Day, Alok, sir. Secretary SSB, and all the participants. It is such an honor for me to get the opportunity to thank you all dignitaries. On behalf of the SSEB Board of Studies Operations, I extend a warm welcome to the students present online in the webinar from across the world. I would like to express my gratitude to the dynamic speaker of the session, C.A. Saran Kumar sir, for his presence and valuable contribution to make this webinar a grand success. I would like to thank you, sir, for your inspiring and encouraging session and for enhancing our knowledge by a wonderful and informative session. A special thanks to Honorable Chairman for sparing his very precious time, even he is so busy and traveling across the country to address the CA students conferences organized by your SSEB. Thanks to our own Alok sir, Secretary SSEB, for providing valuable guidance to make the webinar so successful. I would like to inform you that recording of this webinar will also be available on ICAI DLH platform and on ICI YouTube channel, which can be viewed later also as per your convenience.
Thank you.
Thank you so
Is
much.
successful day by day. I congratulate all the participants for their active participation. I am happy to share here that we have crossed 10,000 plus live participants today in the webinar and created a history. Thank you everyone once again for making it a great success. Thank you. Thanks to all.
Thank you.
Thank you.